Hello, everyone. This is Stock Market Daily. Thank you for joining me today. It is May 11th, 2023. As always, this is not financial advice. Please don't copy my trading strategies because you will lose money. These videos are only for educational purposes. So, if you are new to the channel, please consider subscribing. And if you are a subscriber, please consider hitting the notification bell icon so you get alerted when I post a video. Looking at the SPX chart, you could see that we had another little bit of a down day, not by much, 0.17% today. And the day started a little bit different. We actually gapped down. We were actually kind of pre-market. We were a little bit higher than this close. And right before market opened, we started selling off pre-market. And then the market opened and immediately we got these red candles. So seeing that we got the red candles, the way I started trading is right off the bat, within literally less than a minute, I started selling call positions, going short on the calls position. And that is because I wanted to capture as much premium as I possibly could. So let's continue looking at the rest of the day. Obviously, we had a little bit of consolidation right here in this period with a nice little pop. It did seem like we were going to trend higher for the day. So not only was the SPX trending higher, but also we had the advanced decline line kind of trending higher. And as this was happening, I ended up selling some of my, let's go back to the chart. So as this was happening, we were kind of creating higher highs and higher lows over here, for example, right? I ended up selling some of the calls, which I normally don't do, but I'll show you here in a minute exactly how it looked like. Then we had this nice drop down back, and immediately we had another one of these run-ups. And once again, I sold another call, or I should say that I bought back another call during that time frame. So let's take a look at the actual options. Now, positions are all the same, especially on the put side. Nothing has changed here. The strike prices, I guess I should say, that are all the same. The only thing is we had 3 open call positions here that I sold. So let's look at the calls first. So my first sale of the day, less than a minute from market open, was at the 41.50 level, and I sold 3 of these. For each one of those, I collected $310. I then sold the 41.60 level. I sold 2 of these, and I collected $125 on these. So, like I said, I ended up, when I had the opportunity, I ended up buying this one back, the first one, and I only spent $25 on that one. And then as we kind of kept going up, and just to make sure that we're not going to end up being really close to in the money. I didn't think we're going to end up in the money, but I didn't want to have the stress of seeing this kind of tick up and pretty much touch it or get close to it. I ended up closing it for $10. So I tried not to touch the options until the end of the day, but since there was 3 on one of these strike prices, I ended up closing it a bit early. I mean, $25 still a good price to pay. It's not like I ended up paying a lot of money for it, but still, when you do these trades every day, the fees add up, and the $25 every single time adds up, and ended up, at the end of the year, ends up to being thousands. So it may seem like you're only spending a few bucks here and there to close a position. Yes, and it's good to do if you believe that you might actually go into the money, for example, in this case. But if it's not necessary, I really don't like to close them because it just all adds up in the end. So then let's take a look at the puts. The 4,100 level, we sold two of these, collected $590. Those were good. And Then the 4090s were the 4090 strike price. That one I collected $370. And then the 4080 strike price right here, that one was $205 collected. So that was it for the trade. As you could see, it ended up being perfect right between all of these cells and all of these pretty much. So right between the two, which turned out really, really good. So the other part of what I did today was I finally exited out my credit spread that was, let's see, it was expiring on May, give me 1 second here. Was it May? Yeah, it was May 30th. So on May 30th, I had the 4,300 strike price that was that I sold, and I collected I believe $1,200 per this option. And now today I ended up buying it back. I bought it back for $155. So realized $1,000 something on that. There was two of them. That was great. Now what I did was I opened up another credit spread, and here it is. Let me expand it just a little bit more. So there it is. I ended up this credit spread. Obviously, I didn't do it at the right time. It's, you know, the market isn't at its highest levels, but I did want to spend as least amount to buy this one back. At the same time, I wasn't sure if the market was going to pick a direction here anytime in the next couple of days. I don't see a reason for the market to start going up higher. I think there's some a few little tailwinds for us to go higher, but more tailwinds for the bears as there might be some issues coming up here. Obviously, the banking issues have kind of been subdued recently, so no news from the banks or anything like that, but we do have the debt ceiling that is might play a role here very soon. So I'm also placing my puts that I'm selling very cautiously. In fact, I might start selling only 3 instead of my usual 4. But we still have time before that really becomes a problem. So, but here for June 12th, I am actually down on this one right now. I think we could take a look how much I'm down on it now. Okay, so on the day it's $386. This option grew in value after I sold it, but I think nevertheless, as a few weeks go by, and obviously if the S&P doesn't move up too much, we'd have a really big we would have a really big issue climbing up to this level of 4,250 even, I think. But still, even if it did, even if we got up to past 4,200, we still are able to roll this position, and there's a lot of time on this option, and it's decaying at $68 a day. So that's kind of why I picked it over the one that was on May 30th. So the May 30th one is now decaying only at $24 a day. Okay, so this option will lose $24 a day every single day. However, this option is going to lose $68 every single day. Obviously, given market conditions don't change, but at the same time, obviously they will. So at some point, I was a little bit up on this a little bit up on the option today, on the two of them, but with the day kind of the option went up a little bit in price as S&P value increased. So I am down 396. Obviously, this is not realized. I've already collected the money for it, which was 1,247. So that's how much I got paid to sell this option, and I paid, let's see, 17 cents for this option right here, which makes it a credit spread. So that's the update on the credit spread. And I did the same thing with another account and another account. So I'm basically taking the strategy and bringing it through all the rest of my accounts as well that I manage. And that's it. Tomorrow's Friday. It's going to be, let's see, I don't, there's consumer sentiment data tomorrow. Usually it's not a big event, but in the past, the second to last consumer sentiment data did really bring down the market a lot. Probably not going to happen this time unless something really drastic changes. But overall, usually it's not that big of a deal. And I do believe it's during market hours as well. So something just to keep an eye on. But that's it for today. I appreciate you guys watching. Thanks. We'll see you guys later. Bye-bye.